Keaton Energy is a smaller coal company with a price-to-earnings ratio of 13 and a market cap of 640 million rand. Keaton operates a sizable mine in the Delmas area and has also acquired anthracite mines in KZN last year. It recently reported headline earnings of 25 cents per share, a sharp recovery from earlier periods, but pays no dividends. Keaton, come on, let's see if we can get you excited this evening. Is there any way?
Yeah, it's quite an interesting company indeed. It's sort of emerged also from a bit of a disastrous couple of years. Also was sky high back in the day, when it listed in the early sort of 2008 period. Crashed badly. But operationally, they've done quite well. Paul Miller, who was a corporate financier from Nedbank, went in as the CEO. They kind of listed the thing. They've bought a couple of assets. Their main mine near Delmas is called Vestact, which translates as Catch Bum Fountain. Vestact, yeah, for our Afrikaans
we'll remember
viewers.
that.
So this is good, and they've got quite a nice business there where they export some coal. I'm hearing in the marketplace that Transnet Freight Rail, believe it or not, is actually doing good work out there, and the miners are now, in fact, unable to supply the coal fast enough for them to get it down to Richards Bay. Because you'll remember the reverse was always
I've been hearing the same thing.
They've also got in that Delmas mine a mystery seam of what they call 5-star or 5-cut or 5 something or other, 5-seam coal, which has got like special chemical properties. That's selling well. And then the stuff that they bought down in KZN is basically anthracite mines where you drive in the side of the mountain and you take out the high anthracitic coal, which is very useful for industrial users like SAB Miller and people who have industrial processes that require heat. So it's a nice little company, well positioned. The only thing that raises my eyes slightly is that they're in the middle of a management change. So Paul is leaving and he's being replaced by a guy called Rowan Castle, who was the chief operating officer at Optimum Coal, the guys that have just been bought out by Glencore. So, the change of management, that makes one always feel slightly anxious, but he does seem like a good guy, the incoming fellow.
Well, Craig, Paul knows so much about this company. Is there anything left for you to say?
I was wondering that, yeah. Look, interestingly, in the past, I've criticized this company for selling directly to Eskom at very low margins when they could have exported at almost twice the prices. And in hindsight, it shows you how little I know about the industry, because I think that's been their smart move. They've managed to move everything that they've got. Eskom's been very happy to take it. And so their HEPS went up about 145% over the last year. So there's been good growth, both in revenue and in earnings. And I think there was, 1.2 million tons production. And they're looking at trying to sort of be a 2 million ton player. So that's kind of the company that you're dealing with. It's not an Exara, it's not shooting the lights out. You're not going to get fantastic growth.
But does it have the potential to shoot the lights out down the line?
That's what I see on the table.
Does it have the potential to shoot the lights out down the line?
They're working on very low margins, supplying to Eskom. I think you're going to see improved efficiencies in operations. Certainly that leverage effect will come as production increases. But I may well expect to see another triple digits set in the next set of results. But thereafter, I'm not sure where it'll be. So from a long-term outlook, I don't have that foresight into the company. I think the next 6 months could be good. Next year could be good. But further than that,
Will you take 6 months? I'm bringing it back. You guys are really going on soliloquies this evening. It's difficult for me to interrupt you. Right, so let me bring it back to Paul and see if I can get sound bites out of you.
Yeah, I like it. It has had a big turnaround in profits. They own the surface rights, mostly on the mines that they run. They've got a 30% shareholder in a crowd called Gunvor, which is some kind of international trading crowd. The only thing is they're going to need capital, it seems, in the forthcoming months. So I think if there's one small coal company you want to buy because you really like coal, this would be the one. But understand that, this is a bit of a dangerous playground.
This is high risk. But let's put it there. High risk.
I think it's a good...
high return, potentially.
Hot stock.
Hot stock. All right, we're going straight to hot or not on Keaton. And from your side, Craig.
Yeah, look, I don't know Rowan Castle. Maybe with a change in management, he has different outlook going forward. So I'm going to say it's worth a punt. I wouldn't personally buy it, but maybe worth a punt if you're that way inclined.